Today, we continue the live test of EUR JPY Strategy Number One on the 10-minute chart. This is day 5, and once again, our focus is not on predicting the market. Our focus is on preparing the setup correctly, following every rule with discipline, and allowing price to choose the direction. At the beginning of the video, we are clearing the previous trading session and preparing the chart for a fresh day. The earlier position drawings remain visible for a moment, but our attention now moves completely to day 5. We mark the new session, label the chart, and prepare the two-sided breakout structure that defines strategy number 1. The trading window begins at 12 a.m. London time and continues until 7 p.m. The chart remains on the 10-minute interval, meaning that every candle represents 10 minutes of market movement. At exactly midnight, we identify the opening price of the new 10-minute candle. This becomes our first reference point for the day. From this reference, we place a buy stop order 15 pips above and a sell stop order 15 pips below. Both pending orders carry a 30 pip stop loss and a 60 pip take profit target. This creates a clear 2-to-1 reward to risk structure. The two orders work as an OCO pair. One cancels the other. As soon as one side is activated, the opposite pending order must be removed immediately. This ensures that only one strategy position remains active at any time. Our trade management rules are also clearly defined. When the active position first reaches 30 pips of profit, the stop loss moves to the exact entry price. This protects the trade at break even. If price later reaches 40 pips of profit, the stop moves again to secure 20 pips. The final take profit target remains 60 pips. Everything is now prepared. The reference point is marked at approximately 184.738. The buy order is positioned close to 184.888, while the sell order is placed near 184.588. We do not need to predict which order will activate. We simply allow the market to make that decision for us. Price initially begins moving lower. The candles approach the sell side, and for a moment it appears that bearish momentum may activate the short order. However, price stops just above the entry level. The sell order is not touched, so there is no active trade. Coming close to a pending order is not enough. The exact entry price must be reached before a position can be opened. This is where discipline begins. We do not enter early because we think the market may continue lower. We wait for the precise level specified by the strategy. The market now begins to recover. Price moves back toward the reference point and gradually starts building a bullish structure. We can see a sequence of higher candles developing. The movement is not aggressive, but it is becoming increasingly consistent. Price climbs above the reference point and begins approaching the upper pending level. Now the market touches the buy stop price. The long position is activated, and the opposite sell order is canceled immediately. Trade number 1 is now live, and it will become the only trade taken during day 5. After activation, the market moves slightly higher, but the first advance is limited. Price reaches a small amount of open profit and then begins to hesitate. The candles move sideways around the entry area. There are several small rises and pullbacks, but no strong breakout has developed yet. At this stage, patience is essential. The position has not reached 30 pips of profit, so the stop loss cannot be moved to break even. The original 30 pip protective stop must remain in place. Price briefly falls back toward the entry. The trade moves close to break even and at certain moments, slightly into negative territory. This is a normal part of market movement, and there is no reason to interfere. We do not close the position simply because a few candles appear uncertain. We do not widen the stop loss, and we do not reduce the target. The strategy remains exactly as it was designed. For several hours, EUR JPY continues consolidating. Buyers and sellers are competing around the entry level, and the market has not yet committed to a clear direction. This is the quiet part of the trade, the period when discipline is often more important than action. Then, shortly after the morning consolidation, the character of the market begins to change. Buyers start pushing price higher with greater strength. The candles expand, momentum improves, and EUR JPY finally breaks away from the earlier sideways area. The open profit begins increasing quickly. Price now reaches 30 pips above the entry. This is our first major trade management milestone, so the stop loss is moved from its original position to the exact entry price. The original risk has now been removed. If the market completely reverses from this point, the trade should close at approximately break-even rather than producing the original 30 pip loss. The bullish movement continues. Price now reaches 40 pips of open profit, activating the second management rule. The stop loss is moved again, this time to secure approximately 20 pips. The position can no longer become a losing trade. We have protected part of the gain while still allowing the market enough room to continue toward the full 60 pip target. Momentum remains strong through the middle of the session. Price continues forming higher highs, and the trade moves deeper into profit. The movement now begins approaching the take profit zone. EUR JPY rises to approximately 185.48, bringing the position extremely close to the complete 60 pip target. This is one of the most dramatic moments of day 5. The target is almost reached, but price does not quite touch the required level. The market comes within approximately 1 pip of completing the full winning trade, and then the momentum begins to weaken. This is an important reminder that a position is not complete until the actual target price is executed. Being very close to the target does not count as a completed 60 pip profit. Price now begins pulling back from the high. At first, the decline is controlled, but volatility gradually increases. Several larger candles appear, and the market begins giving back part of the open profit. There is no reason to panic because the position is already protected. The stop has been moved to secure 20 pips, meaning that even a much deeper reversal cannot turn this trade into a loss. EUR JPY falls sharply and then attempts to recover. The afternoon becomes more volatile, with price moving up and down inside a wider range. The position remains profitable throughout this period. Although the full target was narrowly missed, the trade continues holding well above the original entry price and above the protected profit level. This is exactly why the stop management rules are important. They allow us to protect the account while still giving a profitable trade enough room to develop. As the session approaches 7 p.m. London time, the market is trading around 185.21. Compared with the long entry near 184.89, the position is showing approximately 32 pips of profit. The trading window has now reached its cutoff. No new setup will be created, and for the day 5 result recorded in this video, the active long position is closed with a gain of approximately 32 pips. Day 5 therefore finishes with only one trade, one long position, no losing trades, and a positive result of 32 pips. We now move to the performance spreadsheet and convert the trading result into euros. The starting balance for day 5 is 1,510 euros. The recorded position size is 4.5, and the final trading result is plus 32 pips. According to the spreadsheet, those 32 pips produce a financial profit of 240 euro. This means that the effective value of each pip during today's session is approximately 7.50 €. We now add the 240 euro profit to the starting balance of 1,510 euro. The new ending balance is 1,750 euro. In percentage terms, day 5 increases the account by approximately 15.9%. We can also review the complete performance from the beginning of the test. The account originally started with 1,000 euros and now stands at 1,750 euro. That represents an overall increase of 750 euro, equal to 75%, after the first 5 recorded trading days. The day 5 result is especially valuable because it demonstrates several important parts of the strategy within one session. First, the market approached the sell order but did not activate it. We respected the exact entry price and did not enter early. Second, the long order activated and then spent several hours moving close to the entry. We remained patient and allowed the position to develop. Third, when the trade reached 30 pips of profit, we protected it at break-even. When it reached 40 pips, we moved the stop again and secured 20 pips. Finally, the market came extremely close to the full 60 pip target, reversed, and still allowed us to complete the session with 32 pips of profit. This is why trade management matters. The objective is not only to find an entry. The objective is to manage the position correctly as market conditions change. Day 5 closes with a starting balance of 1,500 euro, a trading profit of 32 pips, a financial gain of 240 euro, and an ending balance of 1,150 euro. One setup, one activated long trade, no losing trades, and a disciplined 32 pip result. Thank you for watching Day 5 of EUR JPY Strategy Number One.